Hello, I'm Paul Hunt, Senior Journalist of Energy, Policy and Commodities at Energy News and Mining Monthly. This is a special edition panel discussion focusing on the energy industry in the Northern Territory as part of the annual Northern Territory Resources Week and Southeast Asia Australia Offshore and Onshore Conference, or SEAOOC for short. There's never been a more important time to talk about the role of gas in Australia, our region, or even globally for that matter. The federal government is pinning its hopes on the upstream gas industry to prop up the economy following the COVID-19 pandemic. It goes further than that. Gas is key to decarbonising the energy market as nations worldwide look to minimise coal use. The Northern Territory is in a unique position. One basin or sub-basin is of particular interest. It's called the Beetaloo. The basin has the opportunity to not only shore up the domestic economy, but help countries transition from coal to clean fuels. That's just one aspect of our discussion today. For this special panel discussion, I'm joined by three prominent leaders forging a new future for the economy and energy industry more broadly in Australia. My first guest is Alistair Trier. He's the chair of the Gas Task Force, a government body established by the Northern Territory Chief Minister and Cabinet to oversee the development of this vital industry in the top end. Alistair, welcome. Thanks for your time.
Thanks very much for the opportunity.
We're also joined today by the Chief Executive Officer of Tamboran Resources. Tamboran is an explorer, soon-to-be producer in the Beetaloo Basin. It's the joint venture partner to Santos. Up until recently, it was a private company, but as investors flocked to gas companies in the Beetaloo, it listed on the ASX, which can only be described as perfect timing. Tamboran CEO Joel Riddle, congrats on your recent listing and welcome.
Thanks very much, Paul. It's a pleasure to be here.
And our third guest is none other than Brad Lingo. Brad is one of the most experienced chief executives within the industry and now heads up no less than 3 energy companies. He is the CEO of Armour Energy, director of McArthur Oil and Gas, as well as the chairman to Pilot Energy, a wind and renewables developer in Western Australia. Brad Lingo, great to have you with us.
Thank you, Paul. It's always a pleasure to update the market through Energy Newsnet.
It's great to have you all with me today, given that it's the Northern Territory Resources Week. It's a shame we can't be there in person, but that's the reality that we're currently in. Let's start by taking a look at why gas is so important to the Australian economy and the role of the Northern Territory in this industry up until now. Perhaps, Brad, you could start in a couple of sentences. Broadly, what role does gas play in Australia?
Yeah, it's been quite a remarkable journey. I started in the Australian gas industry nearly 30 years ago, and back in the day when we were going through the Helmer reforms, and there was no such thing as free and fair trade of gas across state borders. Now we have gas linking all the eastern states, including the territory. We have that free movement of trade in gas. And in reality, now gas is the fastest growing export commodity that Australia has. And so it's really core to both the domestic and the export economy across Australia.
Alistair, you're the chair of the Northern Territory Gas Task Force. What does your job involve?
Well, firstly, start with the title. There's an old pastoral saying "big cat, no cattle." So, chairman of the Gas Task Force is quite a title. But look, I've got my role's really important. In the big picture, it's really about leveraging as much opportunity as we can for Territorians and Australians beyond royalties from the what looks like significant resources that we've got. So I really got 3 areas that I focus on. One, strategy and looking at the different things that we need to do from a infrastructure point of view, from a stakeholder and engagement point of view, from a sort of strategic negotiating point of view, and also from a commercialisation angle. And I guess that leads to influencing and understanding where the levers are and how, what mechanisms we've got to influence those levers, and then a significant coordination role across the various elements within industry and other stakeholders to try and pull a coordinated approach.
Well, what impact could the onshore gas industry, like the Beetaloo development, have on the Northern Territory economy?
Well, if the numbers, I should have been a geologist, Joel. I'm forever an optimist, but if the numbers stack up and they are looking increasingly positive, this will make such a significant difference to the Northern Territory's own source revenue, which is just a game changer in its own right, because it reduces our reliance on GST as being the fundamental revenue provider for the Northern Territory. So that's in its own right just really substantial. But beyond that, the opportunities for direct and indirect business benefits, and I don't know if people have seen, but Impex recently put out a study on the economic benefits they see from their project from 2020 to 2030, and they're really quite astounding. But the Impex figures are based on their project of 10 trillion cubic feet of gas. As I'm sure we'll find out later, the figures in the Beetaloo are multitudes bigger than that. So the indirect and direct benefits, but then the other component is the Beetaloo is in the heart of the Northern Territory. It's an opportunity for the region that has never been there before.
Alistair, when we think of gas as an export commodity, we would generally think of offshore Western Australia, the offshore Impex project in the Northern Territory, and of course the coal seam gas fields of Queensland. 10 years ago, nobody had really heard of the Beetaloo Basin. Now there's a lot of hype about it. What's changed since then? Well,
starting at the beginning, I guess with Central Petroleum in the Armour have been there for a long time and producing gas. So the Northern Territory is a long-term producer of gas. But then we saw the offshore, we saw Bayu-Undan being developed offshore, initially through ConocoPhillips and now through Santos, and that project they're still investing now. I think $250 million in infill drilling, and then that will lead to the Barossa. So from a very quiet and humble beginning 20 or 40 years ago in the Armour-Deas, we're now one of the major LNG hubs in Australia. With the Impex project, we saw and I have to say that project's a Western Australian project that has now got a world-class pipeline coming to the Northern Territory. So that's surely put the Northern Territory well on the map. I guess on top of that, we've seen another significant pipeline in the Gemina pipeline that connects the Northern Territory to the east coast of Australia. So again, all of a sudden we're part of the whole of Australian story and not disconnected. And then, of course, we've got the Beetaloo. And the Beetaloo, we sort of first started to get indications that the Beetaloo was significant in about 2009. But over time, that confidence has lifted based on the evidence that through exploration to date.
As I mentioned, there is a lot of excitement in the Beetaloo. Joel Riddle, you're the CEO of Tamboran Resources. Let's take a look at why you pursued assets in the Northern Territory and the Beetaloo. Was there a moment where you went, this is where we need to be?
Yes, kind of following from Alistair's comment, Tamboran originally was one of the first players in the Beetaloo, having acquired our initial EP 161 acreage in 2009. And just to give a little context, industry initially came out in this Beetaloo area to explore for conventional traps back in 1970s, 1980s, and really didn't have any success. And what we saw in 2009 as we picked up the EP 161 is a basin that potentially could be explored from a shale perspective. We saw what was going on in the U.S., where the shale revolution really started really getting going in the early 2000s, and by 2009, 2010, it was really starting to develop quite rapidly. And so we were an early mover. We saw the Beetaloo having a lot of the same characteristics as some of the shale plays that were starting to be commercialized. And so after acquiring our initial permit in 2012, we farmed to Santos, which led to drilling what industry would say is the play opening well, called Tamboran number 1 in 2013. And what that well really showed us was a 500-meter column of high quality shale in a play called the Mid-Valkyrie, which the rock properties exhibited as very similar rock properties as the Marcellus shale, which is one of the preeminent shale plays in the world, based in the US and Pennsylvania. And I think following from that discovery, a lot of activity picked up. There was a number of wells drilled by Origin Energy right to the west of us on a bit of acreage that was historically held by Emirate Hess and then Falcon Oil and Gas, and additional wells that were drilled by a private company called Pangea to the west part of the basin. And right as I think activity was picking up, there was a moratorium that was put in place in late 2016, and it really slowed the industry down for a number of years, and really drilling started to pick up again in 2019 with Origin drilling a couple of wells, and then we were able to open up our Tamboran 1 well that we originally drilled in 2013 and did a vertical flow test. And that flow test really exhibited a lot of the similarities that we saw on a log with Marcellus, with the early vertical flow tests that the Marcellus wells were producing. So it gave us a lot of confidence between ourselves and Santos as our JV partner to get active this year. And of course, COVID slowed us down another 12 months, but we're active in drilling 2 horizontal wells as we speak. And we think, with success, if these horizontal wells produce as we hope, it's really going to potentially kick off a development in the core area where we're focused as a company. So to come back to your question, look, we've been really focused in the Beetaloo from day one, and we continue to be focused in the Beetaloo, moving forward as we move forward into a development phase.
What about you, Brad? I mean, you're leading 2 companies, Armour Energy and, of course, McArthur Oil and Gas as a director. You have tenements in the Northern Territory. What was your reason for exploring there and not the Canning Basin or the coal seam gas fields of Queensland? Why the Northern Territory McArthur Basin?
Really, it's a little bit of old home week, so to speak. Particularly from the Armour perspective, and the new generation of Armour's assets in the Northern Territory moving into McArthur. Both Armour and McArthur are really children of the success of coal seam gas in eastern Queensland. Armour is a company that was sponsored and continues to be sponsored by DGR Global, a multi-commodity, essentially, incubator for resources companies. And it really, Armour and now McArthur's journey in the Northern Territory really grew out of DGR's focus on, multi-commodity exploration across the Northern Territory. And one of the geologists that was involved in those early days, he had actually been an exploration geologist for Amoco. And that journey really started with, a well that we see in a lot of companies' presentations an iconic well called Glide River 9, which was a mineral core hole drilled by Amoco in 1979 as part of a copper zinc exploration program. And lo and behold, much to their surprise, they discovered gas in a play called the Coxco Dolomite after intersecting a rich shale interval called the Barney Creek Shale. And being a mineral core hole, they weren't prepared to have to be flaring a gas well, and got quite a steady gas production rate, and took them nearly 6 months before they could come back in and plug the well. And it was really that historical understanding that was recognized within DGR Global that led to DGR, sponsoring Armour to pick up its large acreage position in the McArthur, which covered that entire glide subbasin, conventional Coxco, Dolomite, and Barney Creek Shale play fairway. IPO off the back of that in 2012 as Armour. And ultimately, execute an initial 5-well drilling campaign, which both on the conventional oil and gas well perspective, but equally following the path of many of the mineral core holes that were drilled up there, just this repeated occurrence of live hydrocarbons, whether it was live oil or gas flows. So that was really the beginning of the journey. And much like with Tamboran, that journey had a bit of a hiatus, was slightly interrupted while we went through the moratorium to decide exactly how these types of resources could be explored and developed, appraised and developed in a responsible way in the territory. And so that's really, part of the journey of how Armour got started, focused on oil and gas in the territory. A little bit of dumb luck by somebody drilling for zinc.
An incredible story. Alistair, I'd like to bring you back in because both Brad and Joel have mentioned the moratorium on onshore gas that was in place, but it was lifted a couple of years ago. Can you talk us through why the moratorium was there and how it got lifted?
Well, it is quite a long story. I guess going back to the point that we started this journey in 2009, we knew then that we had some challenges from a regulatory point of view, because we knew then it was going to be an unconventional play, and hydraulic fracturing, even in those days, was controversial. So we took it upon ourselves to try and get as best informed as we could across the lessons learned, the mistakes that have been made, what we should be doing, best practice, all that sort of stuff. And I guess in hindsight, I think we had 4 inquiries over 10 years and a moratorium. So it's been, it's quite frustrating for industry, and I fully acknowledge that. But the government needed the social licence to be able to allow the industry to continue, and it decided to take the process that it did through the moratorium and the inquiry. The inquiry was very rigorous. It set out to do 2 things. One is look at, making a judgment of is hydraulic fracturing able to be undertaken in a safe manner. And like the inquiries before it came up with the answer yes. On top of that, it said under an appropriate regulatory regime and mapped out a process for that. And thirdly, it also mapped out a social licence process. So the government accepted the recommendations. We're on track delivering them. It's been one of the most comprehensive efforts across a range of government departments that I've ever seen in my time in government. And yeah, it's on track.
Well, let's compare the Northern Territory to other gas-producing states. Alistair, where does the Northern Territory currently sit compared to other states?
So I guess, again, back to my former comments were humble beginnings, but then with the advent of offshore gas and LNG, and we're now one of the three major LNG hubs. But I think I'm close to quoting you here, Joel, but Beetaloo being one of the hottest plays on the planet. To put that in other words, I'm pretty sure that I'm right here that the Beetaloo is probably one of the only tier one plays in the world right now. So compared to other states, if Beetaloo is economic, we're way ahead.
I write a lot of articles on the Beetaloo. Analysts have compared it to the US shale boom, as has Joel. Would you agree that that's what we're dealing with here, Alistair?
Well, repeating Joel's words, in 2009, it was, I can't remember the name of the geologist, but he came in and took me through the physical geology that they'd discovered and what they thought, and they then compared it to the Marcellus, and sort of over time that comparison has proven more and more correct. So I think it's we're very fortunate with the resource that we've got, and again I think it's a tier one resource.
Let's talk about where we are onshore. The McArthur, the Beetaloo. Brad, how remote are we talking, and whereabouts are these basins located in the Northern Territory?
Principally, we're looking at the central and the north, central northeast portion of the Northern Territory. I guess the way to look at it today is they're far less remote than they were in 2009, and certainly far less remote when looking at when Amoco drilled that Glide River 9 mineral core hole. There has been both the development of a market, a much larger market in Darwin around it as an LNG export hub. There has been the successful development of the Negi pipeline by Gemini. As Epic Energy, we first studied building a very similar pipeline that ultimately became the Negi, moving over from Tennant Creek to Mount Isa, and then ultimately into the rest of the Queensland market. And so you have this, very significant resource in the Beetaloo, very significant resource in the McArthur, sitting right between two major LNG export centers. One, the most proximate being in Darwin, and then, four gas-hungry LNG export terminals that are having to run very, very hard in the field, drilling coal seam gas wells to stay full. By other countries' perspectives, this portion of the Northern Territory will, certainly be remote, but it's far closer and far more connected from an energy markets perspective today than it was 10 years ago.
Well, let's focus or hone in on what this basin could mean for the Australian economy. We've had only a few wells, or a handful of wells, sunk over the last 2 years. Joel, what have we found? Because it's not just gas, is it?
Look, where we're focused, in our two assets is an area called the core Beetaloo, and it's what I would call to be a very dry gas play. The liquids component that we see, and Netherlands Sewell is a third-party auditor that's come in and looked at kind of, all the properties sort of in the core Beetaloo area, and they see about 5 barrels per million of condensate, which is very low relative to liquids rich plays that you see in the US, where they trend at about 100 to 150 barrels per million. So we're talking about 5 barrels a million in the play that we're chasing. So this is first characterized as a dry gas play. I think that's the first point I want to make. Look, what we've seen so far, again, we are, one of the most active companies in the core Beetaloo. participating in 2 horizontal wells with Santos as we speak. We've completed our first horizontal called Tamboran 2H a few months ago, and we're currently drilling our second horizontal called Tamboran 3H, and we look to flow test both wells in the next 30 to 60 days. So what we've seen so far in drilling these 2 horizontals is quite exciting, actually. If you remember, I mentioned before the first well that we drilled, Tamboran 1, we did a vertical frac on that well, and what that vertical frac showed us is the flowback was coming from 80% of the flow that we saw from the vertical frac was coming from a very sweet section within the Mid-Valkyrie B that really identified where we wanted to drill a horizontal. And when we drilled into that sweet area, what we saw is very naturally fractured shale. And so what that means is, unlike other shale plays around the world that are say is not as productive, you don't actually have to frack as much to get enormous amount of productivity out of a horizontal. And so this is very good. It's a very positive bit of information along the sweet area of the Mid-Valkyrie B where we're drilling our horizontal. And look, the key information will be once we perform our completion in the next 30 to 60 days is to get flow. And we're going to learn really 2 key bits of information. One is the initial production that we'll see from each of the wells. And then, we're going to look to test both of these wells from 90 to 180 days. And so what we'll see over that period is sort of what the decline looks like. And to Alistair's sort of comment and my previous comment around matching, performance versus the Marcellus, we'll really get to see kind of how that lines up. And, so very exciting days, I think, and subject to seeing, the productivity that we anticipate in our horizontal drilling. This is where I think you're going to see a tipping point where we can move very quickly to establish what we're focused on as a company is trying to establish the initial pilot development, where we would look to produce up to 100 TJs a day into the Southeast market.
Am I right in saying, Joel, that Tamboran is perhaps the most active player in the Beetaloo?
Yeah, that's correct. Look, part of our IPO proceeds that we raised earlier in the year were new capital to fund our share of the 2 wells that I just mentioned, plus drilling our first solely owned well on EP 136, which is a tenement that's very close and adjacent to EP 161, where we're drilling our 2 horizontals. So we're going to learn information from these 2 horizontals that we're drilling with Santos at 25-cent dollars and be able to deploy those learnings into our 100% acreage in a well that we call Maverick 1 that we plan to drill in the early part of next year. So over the next 6 months, 4 big wells are being drilled, 2 by Santos that we're participating in, 1 by Origin Energy that's drilling right to the north west of our EP 136 in a well called the 76S2 well, and then our 100% owned Maverick 1 well that we plan to spud in the first half of next year. So out of 4 wells being drilled in the core Beetaloo, we're going to participate in 3 of them, 3 out of 4 wells. So you're definitely correct. Out of the drilling activity, we're going to be the most active driller in the basin.
Brad, your acreage is not specifically in the Beetaloo Basin. It's in the McArthur. What are your tenements in comparison? Where are your tenements, I should say, in comparison to Tamboran's?
Yeah, we've got 13 tenements. The six of which are granted areas, all in the McArthur Basin. We do have one application area, EP 196, EPA 196, which does tuck into the Beetaloo. It would be located due south of Tamboran's acreage. It's not a large block, But our principal acreage, our six granted tenements, are immediately to the east. And it's where the Beetaloo subbasin comes up to the Emu Fault Zone, the Emu Ridge. And we've probably got the most, structurally complex, multi-layered play system in the region, with the three principal unconventional shale intervals, 2 to 3 conventional reservoir pairs with those shales, starting with the Barney Creek Shale as our shallowest target zone, which is then immediately overlaying the Coxcomb Reward Dolomites as that conventional reservoir pair. And then when we move deeper into the Tsawala group, we get this stacked pay system where we'll see both Wollongong and McDermott shales matched up with Wollongong and McDermott conventional reservoir pairs. So it's quite an interesting system for us that while drilling any given well, we can have multiple primary and secondary targets, all depending on where we are along that ridge. What does make the McArthur acreage unique is I believe that we entirely encapsulate the Glide subbasin, which is the principal province of that Coxcomb Dolomite, where the Glide River mineral core was drilled, and subsequently where Armour drilled 5 wells back in 2012, 2013 with 80% success rate.
Alistair, we've seen unprecedented capital expenditure on onshore gas exploration over the last couple of years in the Northern Territory. How is the Northern Territory government encouraging investment?
Yeah, certainly. Thanks. I think the first thing is to try and provide as much certainty as possible around regulation and the requirements for industry, and that has been a bit of a process because we've come out of firstly the moratorium, and then lifted after the scientific inquiry, and then the 135 recommendations, and then implementing those recommendations. So we've been engaged with industry, not me myself, the Department of Industry, Tourism and Trade, who are the regulators in conjunction with the Department of Environment. But they've had regular engagement with industry as we've progressed through the recommendations to try and increase or provide as much certainty as we can. The second component is around the Territory Economic Recovery Commission process, and that is about how do we grow the economy. And there's the Northern Territory government now has an aspiration of $40 billion by 2030, and that's a big ask. And so there's a lot that needs to happen there to enable that to happen. That's resulted in 3 commissioners: a investment commissioner, a major projects commissioner, and an infrastructure commissioner. And they've hit the ground running. The infrastructure commissioner, in my view, is especially important to work with counterparts, particularly at the Australian government level, in the foundational infrastructure that's required for the Beetaloo, in the first case roads, airstrips, that sort of thing. But then as we move further down the production timeline, other foundational infrastructure. So that's really important. I think the last point I'd make is that the Northern Territory has got demonstrable evidence around attracting investment and delivering major projects. So we've seen the IMPEX project is well known. Prior to that was the DLNG. We've seen the railway from Adelaide to Darwin, the Gemina pipeline, and there's a range of other examples I could provide as well.
So what's the government's message? Why choose the onshore Northern Territory rather than other states or territories?
Sorry, Joel, I'm going to quote you again. It starts with the rocks. and we believe we've got the rocks, and the evidence is looking more and more so. So I think that's the first thing. The second thing is we have the benefit of hindsight, and we've put a lot of effort into planning and learning from the experiences of others. I think our geographical location, we're at the north of Australia and at the south of half of the world's population and the biggest part of the growing economies of the world. So I think all those things add up to making the Northern Territory very strategic.
Alistair, we've gone through the moratorium, but what's now in place to protect communities and the environment in the top end?
Two parts to that. I guess the results of the Pepper report, which was the scientific inquiry, are all about protecting the environment and safeguarding community values, and the implementation of those recommendations is paramount to achieving that outcome. I guess the other thing from a community point of view is planning, and I've used an experience that was explained to us in America as a result of developments in Dakota, where their resource became evident. 20,000 lawmen turned up in a very short period of time with a lot of good, but also a lot of controversy, and we need to plan for that. So we're doing that. We're doing exactly that. We've spent just in the last few weeks, we've been talking to counterparts in Western Australia about the consequences of a $200 billion infrastructure spend in the Pilbara region. A lot of good, but a lot of planning that's required to minimise the impost. So again, it's learning the lessons of others and implementing them.
My guests are Alistair Trier, Chair of the Northern Territory Gas Task Force, Joel Riddle, CEO of Tamboran Resources, and Brad Lingo, Managing Director of Armour Energy and McArthur Oil and Gas Director. We're discussing the future of the Beetaloo Basin and the McArthur Basin, the onshore gas industry in the Northern Territory. As I said earlier, Joel, Tamboran only recently joined the ASX. Why did you list?
Look, it was for a few different reasons. One is, we were as a company looking to grow, and sourcing capital of obviously, very challenging for a private entity in oil and gas. And so, after studying, many options that we had, some of which, included, listing in the US and other exchanges around the world, we recognized that the ASX was, a natural fit for, the asset mix that we had. We also have formed lots of relationships here in the capital markets, certainly over the last 8 years that I've been in country. And we saw a lot of demand for, bringing forward a very unique growth business plan profile that we have as a company focused in the Beetaloo. Again, getting a lot of attention, and investors, naturally would like to play in a pure way, a growth story, that is primarily focused in the Beetaloo Basin, that is in this early stage, kind of this tipping point, so to speak, in which this moves from an exploration type play to a development play, in which, if you look at experiences of investors in the US and the shale plays, the investors that got involved in early on, made many multiples of their money. So a lot of the investors that we met with, really understood that. And when you look at the IPO that we completed, majority of the capital that was raised came from a lot of the institutions, some institutions that are, from the US that were very, very well versed in the shale plays that they've made, many returns on over the years. And so, all that kind of came together for us in kind of early part of last year. And, really resulted in us, building some momentum around investor interest. We completed a pre-IPO round early in the year, and then that led to the listing in early July.
Do you mind explaining what your acreage position is now and how you're operating?
So two primary assets. Again, we have a joint venture with Santos on our primary block, EP 161. This is the block that we've held since 2009, so we know it very well. That block, by the way, is centered right in the epicenter of the Mid-Valkyrie play. And, our guys come from the place of, a lot of depth and understanding the geology and know-how from the U.S. shale basins that a lot of guys on our team have a lot of knowledge on. And so really that led to us pegging EP 161 right in the center of the play. And, obviously, as I mentioned before, this is where we're drilling our two horizontal wells that are essentially twins to Tamboran number 1, the play opening well we drilled in 2013 with Santos. What's really exciting is a bit of acreage that we acquired in the early part of last year called EP 136. It was historically owned by Sweet Pea Petroleum. And what's exciting about this EP 136 permit is it's directly adjacent to EP 161. So again, this is a permit that's centered right in the epicenter. And for everyone on the call that's not aware of what the epicenter means, is in a shale play, this is in the deepest area of the shale play, in which when you study the U.S. Shale revolution and what really kickstarted development were operators focusing in this epicenter. And the reason why is because this is where, in a shale play, the rock properties exhibit very high porosity, very high permeability. And because it's so deep, it's, where you have a lot of pressure. And so all that adds up to high productivity wells and high economic value per well. And so that's why we've been strategically focused in the epicenter and the Beetaloo, again, with our EP 161 block that we've held, for over 10 years, and then EP 136 that we acquired last year. And so it really sets up for a very exciting next few years for Tamboran, given that we're having these near-term results on EP 161 with our horizontal drilling. And we're able to take those results and the learnings and apply those learnings to EP 136, where we own 100% and we operate. And, we're very excited because this allows us to really control our destiny now, being, 100% and have an operatorship. And one of the things that we've also done in the last 6 months is we've hired, a technical and operating team that has a lot of experience in the Permian Basin. This team previously worked for Pioneer Natural Resources, who, is one of the preeminent shale players out of the U.S. And in particular, the COO that we've hired is a fellow by the name of Farron Thibodeau. And Farron previously led Apache's business in the Permian Basin, has over 39 years of experience in the oil and gas industry. And he's most importantly going to be based in Darwin. And so we think that's very critical to building, an operating presence very close to our operating asset in EP 136, just about 500 kilometers south of Darwin. So, we couldn't be more excited because, I think again, with the success of these two horizontal wells, Tamboran 2 and 3, as I mentioned, this is really the tipping point for, I think, the core part of the Beetaloo Basin, where we can really start accelerating the initial development that we envision, being focused in the core Beetaloo, specifically on EP 136.
So how big a development are you looking at? I mean, how many wells are there going to be? Can you enlighten us as to the future plan?
Look, the number of wells is going to be dependent on, the results of these two horizontals. That's going to really guide us toward the productivity and, most importantly, the recovery of reserves per well. And so that'll allow us to adequately plan what we envision to be a pilot. That would be the first step. And that pilot development that we envision would be 100 million cubic feet a day we would look to access the Northern Gas Pipeline that's operated by Gemina, which we have a joint venture with. And, we would envision that 100 million cubic feet a day to establish the initial production as early as 2025. Now, the number of wells, these are going to be a handful of wells. It's going to be somewhere in the order of 10 to 20 wells initially. And then, the scope that we would envision from there is once we get the pilot on and better understand kind of the productivity and the recovery per well, the cost per well, again, deploying a lot of the US technology, we can then be informed through this IP that we would have developed through the pilot around full field development. And, full field development schemes, roughly, we would envision up to a BCF a day, ultimately being developed, potentially, 500 million cubic feet a day to Darwin and another 500 million a day to the southeast, where, there's the domestic market and obviously 3 other LNG plants. But those, that's in the early stages. That's obviously going to be a function of the way the pilot, performs. And, that's where we see, the natural next step. And that's really following the same playbook as operators have, conducted in the early stages of a shale play in the US.
Joel, I want to pick up on something else you mentioned. You mentioned how experienced your team is, which, as we all know, is vital to a project's success. But the Northern Territory itself has quite a small population in comparison to many other states and territories. Given that it has a smaller population, how do you foresee handling workforce challenges?
Look, we see it as an opportunity. I think one thing that Alistair mentioned up front that I 100% would agree with is that, once the Beetaloo development starts really starting to move left to right, we see potential for jobs for Territorians to take part in, and these jobs are not just office jobs in Darwin, but these are, jobs in the field, very similar to the growth in jobs that Alistair mentioned in Dakota, and similar type profile and upswing in jobs that occurred in Pennsylvania when the Marcellus sort of started to really take off. We would envision a very similar type growth out of Darwin. And, this is something that as a company, we're going to be very committed to working with government on. Obviously, we believe in a lot of abundance. We have an abundance mentality where, everyone can win as this play takes off. And, we're going to be looking to work with, side by side with government, community. And that's really what drove, our decision to put our COO right in, based in Darwin. So we can, be on the ground. We think that's incredibly important to have presence on the ground. And that's something we're very committed to.
Well, I guess if the industry is going to be as big as it is in the Northern Territory, it's a good time to buy a house up there, hey? Brad, while Tamboran has been out drilling a lot of wells, you haven't been idle either. What has McArthur Oil and Gas and Armour been up to?
Yeah, coming out of the moratorium, I guess we were a bit of a slow starter getting re-engaged in exploration activity. But we entirely intend to be quite a fast follower. The first thing that we've completed is the largest privately acquired airborne geophysical survey in Australia, certainly in the territory, covering over 20,000 square kilometers, and in particular to help direct our go forward activity in terms of both seismic and drilling. We are just yesterday going through the preliminary results of that airborne survey, and that's really directing the next phase of activity, which will involve both significant seismic acquisition. It'll also involve significant activity associated with The previous wells drilled, re-entry, additional extended production testing, deepening, to also explore, appraise, assess those unconventional, conventional reservoir pairs. And we're putting together quite a significant program that we're making, the cornerstone of the McArthur IPO.
This panel discussion is part of the Northern Territory Resources Week and the longest-running gas conference in Australia, SEAOOC. Alistair Trier is the chair of the Northern Territory Gas Task Force, Joel Riddle is the CEO of Tamboran Resources, and Brad Lingo is the CEO of Armour Energy. We've discussed a lot about projects, but let's take a look at demand now and the future of energy. We are in an energy transition, but the demand for gas is increasing. The latest data from the Office of the Chief Economist shows increasing LNG prices on the back of international demand. Domestically, we are also struggling to bring the price of gas and electricity down. This bodes well for McArthur Oil and Gas, doesn't it, Brad?
It certainly does. You always want to go to market. You always want to be focused on a commodity that at the time you got started in it was probably unappreciated or underappreciated, and find out that you're actually in the commodity that everyone is saying, oh my gosh, we actually do need it, and we need a lot of it. We have seen over the last week or so, everyone waking up and realizing that we're potentially have another energy crisis right on our hands. They're running out of hydrocarbon resources in the UK, struggling with that. The reawakening of economies in a post-COVID world is recognizing significant underinvestment or delayed investment in core hydrocarbon resources. And when you start talking about LNG spot prices in Asia of over $20 an MCF, that tells you that demand is quickly outstripping immediate supply.
What's your outlook, Joel?
Look, I agree with everything that Brad just mentioned. I think the government's been very clear with what, when they look out over the next 5 or 10 years and dramatic wedge of shortfalls that are anticipated in the Australian domestic market. And, so quite simply, we've really tied our business plan to really addressing that, trying to be part of the solution. But one of the points I want to also stress that I think you mentioned, Paul, is, we are moving into an energy market largely that is looking to consume cleaner forms of energy. And, we think gas is going to be a key part of that, particularly low CO2 gas. And, one of the things we're going to be committed to as a company as we develop in the Beetaloo, where, gas has CO2 contents of 2 to 3%, is looking to offset that through really a combination of looking at carbon capture, integrating renewables, and at the last resort, purchasing carbon offsets, so that when we develop, we're developing a net zero gas stream. And we think, that at a very minimum, is going to demand a premium price as it hits the market. At the very maximum, it'll be really differentiated versus other more dirtier forms of energy as we move forward. And the one data point that I always mention is, LNG buyers in Japan, or 15 of them, that committed to only buying net zero cargoes in 2050. That is where I see the energy market transitioning to. And that's the bellwether that I think as an industry, we are, being, forced to adjust to. And, this is where, again, the Beetaloo is a natural fit as it relates to, development of cleaner forms of energy, but for two reasons. One is the scale. It's, multiple TCFs of potential. And two is just it's very far down on the CO2 curve from a starting point. And so, with it being 2 to 3%, it's very economical for a developer like Tamboran to offset that 2 to 3% and, satisfy what's being demanded in Japan by 2050.
Alistair, I'd like to bring you back in now. There's a lot of talk about downstream opportunities. Can you speak to the 5-point plan that you've developed?
Yeah, thanks very much, Paul. I guess the 5-point plan was developed in response to our initial trips to the United States after we started to realise in 2009 that the Beetaloo was quite significant. And as I mentioned earlier, we went across to learn about regulation and how we could get ahead of the game there. But we kept on asking the question, if you had your time again, what would you do? And the consistent answer was plan. And we really took that on board, and that's what the 5-point plan is about. It's about what mechanisms can we bring to bear to get the best benefit we can for Territorians and Australians more broadly. And that's not about wrenching every last dollar out of industry. In fact, it's entirely the opposite. It's just making sure that we can get the best value for the dollars that are going to be spent and channeled into benefits of local communities. So the 5-point plan focuses on LNG and establishing or continuing Darwin's journey as a world-class LNG hub, services and supply, and that's fairly understandable for local businesses to be able to benefit. Establishing a manufacturing hub based on gas, and I guess getting the value per molecule that manufacturing brings, skills, research and innovation, again, jobs, and lastly, contributing to Australia's energy security. So to both Brad and Joel's comments, with the prices of energy now, or of gas now, what can we do to contribute to Australia's, I suppose, provide more certainty around the cost and the reliability of electricity down the track?
I'd like to pick up on sort of training and upskilling, if you like. This is key to industry growth of any kind. If you don't have the labour, you don't necessarily have the industry. What are you, as chair of the Gas Task Force, doing to attract talent to the industry and the Northern Territory, for that matter?
Well, I think I need to be upfront here and say that we had a bit of a false start. So we probably got ahead of ourselves in understanding just the realities of developing a play such as the Beetaloo, in that it has to go through a series of stages to move to the confidence needed that it's economic to drive the significant investments. And I guess that takes longer than was first realised, and that we need to recognise that. But we're starting now to focus on a sort of a fairly staged process of identifying what's required in a skills point of view at the lower end of technical ability. So what are the on-ground things that are needed for industry? As Joel was talking about 1 or 2 wells and then potentially 10 or 20 wells, and I guess with the other 3 main players in the Beetaloo, what that means and what the skill sets are required, because training people up takes time in itself, and developing the training to train people up takes time. So we need to start at a fairly basic level to do 2 things. One is to get the systems in place and the infrastructure from a training point of view understood. But the second thing is to provide the confidence to industry that they can invest in skills development as well going forward, knowing that we're on a pathway that's going to deliver the requirements that they need.
One last question for you, Alistair. When we talk about establishing a downstream manufacturing industry based on gas, what exactly are we talking about here?
So I guess what we know is that we've got offshore gas that's proven economic. The majority of that is, well, all of it's going to LNG at the moment, but there is offshore gas that is currently not allocated. We've got this huge resource in the Beetaloo that's going through the exploration and soon to be appraisal stage, and that we're hoping that meets all the boxes and proves economic as well. So we know we've got gas, we've got other enablers, we've got land, we've got water, and as I mentioned earlier, we've got strategic location. Joel mentioned carbon. The onshore story is really good, with carbon in the Beetaloo below 4%, and in certain areas much lower than that. Offshore, it's higher. So for offshore gas, carbon will need to be dealt with. So that leads to carbon capture. But with those two elements, then we've got the opportunity for blue hydrogen and blue ammonia. But we're also looking at renewable projects. So with renewable projects, and there's timeframes involved in that, then leads to the opportunities around green ammonia and hydrogen, and all the things that flow from that. If there are liquids in the Beetaloo, and the Beetaloo is quite a big place, and I think my understanding is different parts of the Beetaloo offer up different opportunities. Then there is opportunities for petrochemicals, and the longer anything remains in the pipeline, the more expensive it gets. So Darwin's closer to the Beetaloo than the East Coast. So we're looking to take advantage of all those opportunities, and there's a significant amount of planning that's gone into the foundational requirements for establishing a manufacturing precinct, including pre-approvals, including the sort of infrastructure, logistics, and corridor requirements, but also infrastructure funding strategies and a range of other things.
We are just about out of time. I'm going to go around the panel now and ask you for final thoughts. Perhaps I could start with you, Brad. What are your final thoughts to end this panel discussion?
Oh, look, we're incredibly excited by the opportunity that the territory presents. I can almost, see, settings that remind me of the coal seam gas explosion that happened in eastern Queensland. And if you turn the clock back even further into the middle of the 20th century, you're looking at a resource explosion potential that you've seen in the Pilbara. Mm-hmm. So Australia's demonstrated that in two, very significant resource provinces that it can deliver these major developments for the good of Australia and good of the global economy, and do it responsibly. And I see the territory having all the marks of being able to replicate that same outcome around the McArthur Beetaloo.
Joel, what are your final thoughts?
Yeah, I couldn't agree more. I think when I look at the last 20 years, seems like every decade, there is a nice big resource development that occurs here in Australia, the Pilbara, in the early 2000s. Early 2010s there was a CSG, and I think the next decade is definitely, the Beetaloo has the potential to be equivalent, if not a bigger impact on Australia, certainly in the Northern Territory, and with Darwin being strategically located to markets in Asia, having this significant impact on decarbonization in the region. And so we couldn't be more excited to be on the front end of that growth. And we think it's going to be a very exciting next 3 to 5 years as we get through out of this exploration phase that we've been sort of in for a little while, and moving into kind of development, and really feeding into a lot of the initiatives that Alistair and the NT government are laying the framework and foundation for. And so, again, we as a company are committed to being part of the solution, and we look at it through the lens of how does this help Australians? How does this help Territorians? Again, this gas reserve is vast and highly productive in the Beetaloo, and it really can check all the boxes as it relates to being the next big development in Australia.
Alistair, what's your final thoughts?
Just building on a couple of comments there, I think Asia or Southeast Asia is 50% coal-fired at the moment, so there's huge opportunities for gas to contribute to emissions reduction in the short to medium term. But gas around the world, at least I think only 30% of it goes to energy at the moment, 30% to reticulation and 40% to manufacturing. So the future for gas is threefold. It's got the here and now in providing energy to current markets. It's got the ability and displacing heavier emitters. It's got the ability to underwrite a transition into hydrogen and other cleaner forms of energy. And then the long-term future is a fundamental component of manufacturing.
Gentlemen, we are out of time, but thank you for joining me. Brad Lingo is the CEO of Armour Energy and a director of McArthur Oil and Gas. Joel Riddle is the CEO of Tamboran Resources, and Alistair Trier is the chair of the Northern Territory Gas Task Force. I'm Paul Hunt, senior journalist at Energy News and Mining Monthly. This panel discussion was brought to you by Aspermont Media for the annual Northern Territory Resources Conference and the Southeast Asia, Australia Offshore and Onshore Conference, or SEAOOC. You can find out more about the conferences at ntresourcesweek.com.au or by subscribing to Energy News, energynewsbulletin.net. You can find all our panel discussions and feature interviews on iTunes, SoundCloud, and on YouTube. Just search Energy News AU.